Hi guys, I welcome you all to today's session on 5 MCQs on securities market, which is a part of the series in which we are regularly discussing important MCQs with regard to securities market, which are very important for the upcoming SEBI Grade A 2018 examination. Now today's topic is going to be credit rating. So friends, we have been working in this direction of guiding students for competitive examinations for the past few years, and we have been blessed with some of the very amazing results. In RBI Grade B 2017, 27 of our students, they made it to the final list. And in NABARD Grade A 2018, 20 of our students, they were selected in the final list. And RBI Grade AB 2018, the final result is still awaited, but again we are positive on this front also. Now before directly jumping onto the questions, let me quickly tell you about the courses which we are presently running for SEBI Grade A 2018. So we are offering these courses. You can avail the course for Security Market Phase 1 and Phase 2, or you can also choose the Phase 1 mock test along with this Securities Market course. And there is this full course for Phase 1 and Phase 2 of the SEBI Grade A. So you can choose as per your requirement, and also you can avail attractive discounts by using the codes given below. Now, in order to channelize your preparation in a better way and in order to prepare you for all the related competitive examinations in one go, we are also providing some combo courses for SEBI, RBI and NABARD. So you can choose the combo courses also if you are preparing for all these examinations. Again, you can avail discounts by using the discount codes mentioned here. So friends, let's start with the first question. SEBI shall not consider an application for the grant of certificate unless the applicant satisfies certain conditions. So this one is with regard to granting a certificate of registration to the credit rating companies, and the question is asking which of the following is there among such conditions. Application is set up and applicant is set up and registered as a company under the Companies Act 2013. Applicant has a minimum net worth of 5 crores. Application has in its memorandum of association specified the rating activity as one of its main objects. Options are 1 and 2, 2 and 3, 1 and 3, all of the above or none of the above. So friends, to answer this question, we must be aware about the eligibility criteria which has to be satisfied in order for your application for grant of certificate to be accepted. Now with regard to this, there are certain conditions which have been specified with regard to granting registration to credit rating agencies, and there is the restrictions or conditions. They include that the applicant is set up and registered as a company under the company's law. The applicant has in its MOA specified rating as its main activity, so this is also correct. The applicant has adequate infrastructure to enable it to provide the rating services, so this is very logical and correct. The applicant and the promoters of the applicant, they must have the professional competence, financial soundness and general reputation to the satisfaction of SEBI. So people who are behind this kind of venture, they must also be very active and they should be proper competent. Neither the applicant nor its promoters or any directors of his promoter has at any time been convicted of any offence involving moral turpitude or any economic offence. So you should not have committed any sort of offence if you need this registration. Neither the applicant nor any person directly or indirectly connected with the applicant has in the past been refused by SEBI a certificate under these regulations. So in the past, it should not have been happening that you presented your application to SEBI but it was rejected. So these are the cases which have to be satisfied with regard to conditions for granting registration to credit rating agencies. Now let's also briefly take a look at the SEBI's new rules with regard to credit rating agencies. So SEBI has issued these rules under which a credit rating agency will not directly or indirectly have more than 10% of the shareholding or voting rights in another credit rating agency, and it should not have any representation of board of another credit rating agency. So these rules have been issued by SEBI in which one CRA has to remain away from another CRA. Further, SEBI's approval would be needed for acquiring the shares or voting rights in a CRA that results in change in control. The minimum net worth threshold for the rating agencies has been raised to rupees 25 crores from the current level of rupees 5 crore. And the SEBI has given 3 years to existing credit rating agencies to comply with the net worth requirement. So existing, they can comply in 3 years. For new ones, they must comply with this requirement. A credit rating agency will not carry out any activity other than the rating of securities. So this agency, it should solely be focused on the rating of securities and it should not carry out any other activity. So now we can easily answer this question that the first and the third conditions, they are correct, but for the second statement the threshold has now been raised and it is now been made 25 crores. So the correct answer is going to be option number C, 1 and 3. Now let's move to the next question. Which of the following disclosures are required to be made by credit rating agencies on their website on annual basis? List of defaults separately for each rating category, its total receipts from rating services and non-rating services, all the unsolicited ratings carried out in the last 3 financial years, all of the above or none of the above. So this question is with regard to the disclosure requirements with regard to credit rating agencies. Now when we talk about the disclosure requirements for credit rating agencies, then the credit rating agencies with regard to the ratings which they have assigned and the periodic reviews with regard to these assignments, they have to issue periodic press releases, and these press releases, they have also to be published on their websites. Where a specific format has been prescribed, the disclosure should be made in that particular format. So where SEBI has prescribed that you should disclose this thing in this particular format, you must comply with that format. Further, in case of listed securities which are listed on the stock market, the credit rating agency shall also make a disclosure to the stock exchanges, and this is all required as per the SEBI credit rating regulations. So if the securities, they are listed on exchange, the credit rating agency should also disclose to the stock exchange. Now if we talk about the important disclosures which are required to be made on the website of the credit rating agency, then they include the policies, methodology and the procedure. So this is the policy, methods and procedure in detail regarding the credit rating. So what policies, methods and procedures it is following. So it has to be disclosed. Details of the new credit ratings assigned during the last 6 months. On annual basis, the list of defaults separately for each rating category. General nature of compensation arrangements with the issuers of whose securities they are rating. Disclose annually its total receipt from rating services and non-rating services. So we have to make sure their maximum revenue is coming from rating and not non-rating services. Annually, all the unsolicited ratings carried out in the last 3 financial years, they have to be disclosed. Shareholding pattern as prescribed by the stock exchanges for a listed company under the listing agreement. So as per the listing agreement, the stock exchanges have prescribed that the listed companies, they must maintain a proper shareholding pattern as in the prescribed format or prescribed manner. So this has to be complied by them and this has to be disclosed by them on their website. Compliance status of each provision of IOSCO. This is International Organization of Securities Commissions. So this is an international organization which is concerned with the welfare or the proper regulation or growth of the securities market. So it is also credit rating agency has to also disclose the compliance status with regard to the provisions of this organization's code of conduct. So now we can easily answer this question that all these disclosures, they are required to be made by the credit rating agencies on their website. So the answer is option number D, all of the above. Now let's move to the next one. Which of the following is incorrect with regard to unsolicited credit ratings? Options are: unsolicited credit ratings are the credit ratings not arising out of the agreement between a credit rating agency and the issuer. In case of unsolicited credit ratings, the credit rating symbol shall be accompanied by the word unsolicited. A credit rating agency shall monitor and disclose the credit rating during the life of such rated securities as if it were a solicited rating. None of the above is incorrect. All of the above are incorrect. So to answer this question, we must be aware about the unsolicited credit ratings. Now in case of the unsolicited credit rating, so this is the case in which the credit ratings, they are arising out of no formal agreement between the credit rating agency and the issuer. So there is no agreement between the two, but still the credit rating agency is rating those instruments. Here the credit rating symbol shall be accompanied by the word unsolicited, so as to make sure that the people are aware that this one is not a result of the agreement. Further, a credit rating agency shall monitor and disclose the credit rating during the life of the rated securities as if it were a solicited rating. So you cannot just make a one-time disclosure or one-time assessment of this unsolicited security. You must monitor and disclose the credit rating over the entire life of that security as if it were a solicited rating. So this is something which is required by SEBI. So now we can easily answer this question that all these statements, they are true. So here none of the above is incorrect. So option number D is going to be the correct answer. Now let's move to the next one. Rating symbols AAA, AA, A, BBB and so on are used for rating. Options are long-term debt instruments, short-term debt instruments, long-term structured finance instruments, long-term mutual funds, or all of the above. Now when we talk about the SEBI's rules with regard to credit rating, so SEBI has observed that the credit rating agencies, they should use different sets of rating symbols, and it has also prescribed different sets of definitions. So SEBI has said that there should be a set of common norms with regard to different symbols which are being used by the credit rating agencies, because if they would use the common symbols, this would entail easier understanding on the part of investors, and this was also going to promote high standards of integrity and fairness in the credit ratings. So in this regard, SEBI, in consultation with the credit rating agencies and on the recommendation of its Corporate Bonds and Securitization Advisory Committee, it has come out with some standardized rating symbols. So these symbols, they have to be allocated with regard to any particular security if it falls in this category. So here you can see a set of list with regard to different sets of credit ratings which are assigned to different instruments. So you can see for long-term debt instruments, the ratings, they are like AAA, AA, A, BBB, BB, B and C. So if you encounter this kind of a rating, you have to make sure, you have to understand that this is a long-term debt instrument which has been rated here. For short-term debt instruments, the sequence is A1, A2, A3, A4 or D. So if A1, 2, 3 is being attached to A, so this means this is a short-term debt instrument. About long-term debt mutual fund scheme, this is more or less similar to this one only, but here MF is being attached to make sure that this is a mutual fund scheme. For short-term debt mutual fund, this is also similar to this one, and here also MF is being attached to make sure that this is a mutual fund scheme. So friends, now we can easily answer this question, that if the rating symbols AAA, AA, A and BBB are being used, then this is signifying a long-term debt instruments. So answer to this is going to be option number A. Now let's move to the next question. Which of the following is incorrect with regard to IPO grading? Options are: it is a service aimed at facilitating the assessment of equity issues offered to the public. IPO grading is assigned on a 5-point scale with a higher score indicating stronger fundamentals. IPO grading does not take cognizance of the price of the security. SEBI has recently tightened the conditions with regard to IPO grading, making it mandatory for all the companies to get their IPOs graded, or none of the above is incorrect. Now when we talk about IPO or initial public offer grading, then this is a service which is aimed at facilitating the assessment of equity issues which are being offered to the public. So in the previous question we learned about the rating of debt instruments on a major site, but we more or less left the IPOs or the shares. So for grading of IPOs, there is this separate set of grading which is IPO grading. So here we are assessing the equity issues. So here we have to remember that here we are only assessing that equity issue. We are not commenting on whether you should buy that share or not. So this is not an investor recognition. So this you must remember, that if there is an IPO grading, then this is not an investor recommendation. Rather, it's one of the inputs to the investor, so that the investor can later on make a completely informed decision. Now the grade assigned to any individual issue, it represents a relative assessment of the fundamentals of that issue in relation to other listed securities in India. So it is more or less concerned with the fundamentals, and such grading is assigned on a 5-point scale, and the higher grade indicates that your score is higher or your fundamentals are strong. So this is about the basic idea or the basic concept of IPO grading. Now when we talk about the recently announced measures by SEBI with regard to IPO grading, then we have to remember that SEBI has recently scrapped the IPO grading. So this has been scrapped. So SEBI has recently approved the deletion of all other provisions relating to IPO grading from SEBI issue of capital and disclosure requirements regulations. So these grading regulations, they have been more or less scrapped by the SEBI. So IPO grading, it was first introduced as an optional feature in 2006. It was made compulsory in 2007, and it was again made voluntary in 2013. Now if you talk about the IPO grading process, this never took into account the price of the public issue. So this is an important thing, that price of the public issue, it was not being considered by this IPO grading, and it considered only the company fundamentals, the quality of the management, and the financial / business risks which are attached to this business. So it was not concerned mainly with mainly with the price of the public issue. It is concerned with the fundamentals, management quality, and other parameters. More importantly, an internal analysis which was conducted by SEBI in 2010, it also disclosed that there was no kind of a correlation between the grades which were given to IPO and their performance after they were listed on the securities market. So there was a question mark on the efficiency and utility of this entire exercise of IPO grading. So that's why SEBI recently deleted all the provisions with regard to IPO grading from SEBI ICDR regulations. So now we can easily answer this question, that this IPO grading, it has not been made mandatory by the SEBI, rather it has been deleted by the SEBI. So here the incorrect statement is going to be option number D. So friends, this was all about our discussion on some of the very important MCQs pertaining to the securities market. And if you have any query or you wish to know more about our courses, you can visit our website, which is www.edutap.co.in, or you can drop us a mail at hello@edutap.co.in, or you can call us at 8146207241. So friends, if you found this video useful, please like the same, share it with your friends, and subscribe to our YouTube channel. And if you wish to get regular updates on Telegram, you can subscribe to our Telegram channel, the link of which is given here as well as in the description to this particular video. And subscribing to our Telegram channel is also going to help you fetch the PDFs of all the discussions which we are doing on YouTube. So thank you friends.